is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks, on a short week. You gotta love it. Let's make it a great one. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials down 58, NASDAQ off 5, S&P's down 2.5, gold contract down $1.50, trading at $12.01 an ounce. Silver, flat, $14.06 an ounce. Light sweet crude, flat, $67.81 a barrel. Notes and bonds, they're down. They got them down with some volume here. We are down 17 ticks in the 10-year, trading 119.20. 30 years down a full point, 143.12. King dollar up 357 ticks, trading 95.345. The euro is at 115.62 to $1 US. The yen is trading at 111 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We take a look at the SPY. You get a sideways market out here. You're down 37 cents in the SPY, trading 12.87. Now, to get in the lower range, folks, you actually got to get down somewhere about the 12.86 to 12.85 level. That being said, what you are going to have out here is that you basically have an expansion of volume coming off these highs. The range, well, actually, no, the lower range is 286.62. That's where we're at, 286.62. We actually get down to 286.71 today. NDX 100, the 3 Qs. We take a look at the 3 Qs. 3 Qs right now are trading down 15 cents, sideways move. That is on the daily. We put this on the weekly, and what you're going to see on the weekly now, this is you're coming off the high with volume. Now, when you come off a high with volume, bottom line, you can get a larger correction. That's how this is shaking out. We're at 181.66. That's not necessarily in the lower range. It's under the spike that we had from the 27th of July, the week of the 27th, but realistically, the Qs have to get, I would say, to get inside the lower range, you're talking 177, because the Qs have been going up for quite some time. The composite, the NASDAQ composite out here, is 79.17. Now this, I believe, is in the lower range. Let's see. 79.23. Oh, it's so close. So picture this. This is more of an art than just. It's not a it's not a binary deal, folks. When you're going from one range to a second range, particularly when you have a couple spikes in between it, but. To cut to the chase, 78.67 to 79.23 is the number. And right now we're at 79.18. So you can make the case that, yeah, you're in the lower range slightly. We'll see if that's where we're going to end up closing out. Let's go take a look at the oil contract out here. So we take a look at this oil contract. Crude oil trading flat out here today. You're at $67.79. That being said, what you are doing here, I suspect we're going to start building cars to get into this $63 area. We take a look at this, and if you did put this on a weekly basis, what you're going to see is that you came down with some big volume, man. I mean, there was volume out here this week inside the oil market. If we go take a look at the XLE, you'll see the XLE also had volume on the way down. Right now, this is a sideways market, down 16 cents, but you are hammering the swing low that it's going after, and you do have an expansion of volume. You want to remember, when you're doing these volume stats this week, you got to add a day of volume because we were closed on Monday. Notes and bonds. Let's go to the 30-year bond first. We take a look at the 30-year bond. 30-year bond right now is down a full point. We have done 354,000 contracts. Bottom line is that you do have price spread with this baby. So the real question, oh, look at that. Okay, it's not going to be an ABC down, though. That's good news. Your B point on this has 383,000 contracts, and we're at 354. We won't do 30,000 contracts coming into the close. The bond market itself, what tends to happen is that the bond market is very active intraday. You know, 2:30 it starts slowing down. But we just see out here all the movement was this morning when the jobs number come out. Bottom line, good jobs number, good growth number, good all of the above. And what that did, of course, is that that brought the Fed Fund futures up to the 70%. Oh, this is kind of cool. It backed off again. So this morning we're basically 96%. That our next Fed meeting, folks, is on the 26th of September. The following one is in November. In November, the market does not expect the Federal Reserve to go up on short-term rates. Right now, it's at 3.6%. December 19th, however, bottom line is that we're at 66%. We were at 60%. We were 59% at the beginning of the week. Got up to 60, 61. Was at 70% this morning, and now that basically is selling off a bit. And that is a tradable vehicle, meaning that people are putting trades on as to the aspect: are there going to be a short-term rate hike or not? Some of the higher volume equities out here today, we have, we got to do Tesla, right? Tesla's the number. Tesla's a mess, folks. Bottom line is that they're bailing out of Tesla. 20 million shares on the way down. You're going after a swing point that it's already a high volume swing point of $244. We pull this back. What you're going to see now, what you're going to have is this. I mean, this high volume low is sticking out like a sore thumb. It was the week of April 6th. The number is $244.59. Now, the bottom line is that we didn't hit it this week. That is problematic in a huge way for owners of Tesla, because when you start barreling into a swing point and then you don't break it and you're down all week and you get an expansion of volume, that's the whole deal of building cars. Sleeps over the weekend, wakes up Monday. You get 2 days for Tesla to basically, for Musk to basically talk, walk, squawk, and then the market opens and they take him south once again. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrial's down 55. NASDAQ is off 3. S&P's down 2.5. And as we kick into this weekend, of course, we'll see what type of action we have coming into next week. One of the biggest things, of course, the market's looking at is that, okay, Trump was out there today saying that, I mean, he's close to putting this tariff on an additional $200 billion in Chinese goods. If that's what you get, folks, bottom line is that if you're looking to buy anything, you better buy it right now, because another $200 billion on tariffs and Chinese goods is going to have everything more expensive ASAP coming right into the holiday season. And I suspect most of us will probably be in shock that you have a price escalation coming right across, whether it's phones, whether it's sneakers, whether it's lights. Guess what? You go into any type of store and just about everything's made in China. So it's going to get intriguing watching the retailers now. That's where I think this whole thing's going to shake out. The good news is that he hasn't put it on yet. That's the bottom line, because the way that was shaken out, it almost looked like the first time he could have put it on was at 12:01 this morning. Yeah, 12:01 this morning. Bottom line, we'll see where it shakes out. But it's a monster tax. That's the bottom line, and we'll see how this shakes out. Some of the high volume stocks, you get Apple up $1.50. Tesla's the killer. That's down $18.50. You have let's see, let's pull up some of the high flyers out here. Amazon is flat, $19.58. Now, if we put these, we can put all of these on weeklies. Bottom line, it looks to me like the Amazon still wants to get lower. Google, we go take a look at Google. Google, $1,166. That's off the high of $1,273. That's not quite inside the lower range yet. Yeah, it is. It's inside the lower range by $20. So this is trouble in paradise for Google, too. So Google hit a high out here, $1,273, the week of the 27th of July. You're back inside the lower range. That is saying that Google will go test the $1,110 number. Facebook is toast, man. This is going to be interesting watching how Facebook shakes out, because what you have with Facebook is that you are coming down with volume. You have this high volume low at 149. That's what it's going after. Right now you're at 162. Twitter, TWTR, we take a look at Twitter. Twitter out here, $30.57. This also has the high volume low that's laying out here. And that baby is at 27. Oh, look at this. Oh, this is more. Oh, no, it's not an ABC down. Whew, that would have been a trip. Yeah, 27 bucks on Twitter. That's what the baby's setting up at. Let's go to the financials. We take a look at the XLF. That's been a sideways move. Hasn't been able to bust to the top. Hasn't been able to basically take out the bottom. But what I do see here is this, is that you try to push into the highs of the consolidation. This consolidation has been out here since all year, basically, since January. This is good. This wants to back down once again. Let's go look at JP Morgan. What's interesting here is that JP Morgan is basically flat. What's interesting is that you have the XLF near the highs of its consolidation, yet it can't bust it, and the highest weighting structure inside that XLF is Berkshire Hathaway, and Berkshire is almost right at its highs. Berkshire on the B shares, $217.62 to the high. We're at $214.10. So that's just showing that underneath Berkshire, that you do have weakness inside of that indice. We take a look at the small caps. Small caps out here, IWM is down 34 cents. You're trading 170.29. And that's not inside the lower range yet either. You know, 170.20 is the number. And right now, you're at 170.29. We'll see where this shakes out as we come into the close. Dollar, which I said, let's go through the dollar again, because the dollar is in a confirmed ABC structure on the way down. What we have had, it failed on Tuesday and Wednesday to get the higher price. Tuesday, we got up to a price point of 95,680. Gave it up. Wednesday, 95,620. Came down yesterday, dramatically lighter volume yesterday. We're looking for the bounce today. Got the bounce today. What's intriguing, though, is that it can't make it to that high of just Wednesday, which realistically it should have been able to make it. Particularly, we had 25,000 contracts. That's good contract volume. They just don't get enough price spread going along with that. The SMHs, which took the NASDAQ as well as the Composite South, still wants lower price. You came off these highs. The SMHs come off the highs, have volume on the way down. If you take a look at some of the culprits, Lam Research, LRCX, that baby was one of the first ones that let it down almost a year ago. And now what you have is that Lam, look at this, it still hasn't hit it. So this is really dangerous too, and this is what this is. So we have the infamous February 9th high volume low in a lot of these equities that still haven't got tested, and plenty of them have. Lam is going after it. Now, that high volume low in Lam is $156.83. This is another case that it would have been better if it hit it this week, but guess what? It's missed it by $2.50. So it's hit 158.52. Lam's going to have a problem Monday morning, too. That's what it looks like. You know, this thing is going to have a sleeper, wake up in the morning, go after it, and more than likely we're going to see it, well, it has some support at 147. You know, but of course 147 is down another $12 down from where we are. We put this on a monthly basis, and yeah, it's set up the same way in the monthly. The problem's going to be in a lot of these that what you had is that, let's go to CLAC, is that because it was a straight line move up, as you're coming down, there's not a lot of support. Like CLAC just went from $119 to $104 in 2 days. We put this back. This is a real problem. This has been these high-end consolidations that have been going on for a long time. A real problem, because that's how large tops get made, folks. Is that you're up at highs, you consolidate for a year and a half, and it's a wide consolidation. In CLAC's play, it was $121 to $97, so you had a $21 consolidation. You blow apart. You're going after the lows of the consolidation. You break the lows of the consolidation, and then guess what? You're going to get down another $21. You take the 21. If you're up there too long, that's what highs are made about. And when you're doing this, if you do it over the weekend, just line up your channel from the top, channel to the bottom. What you're going to see in these big consolidations, and this is just about every equity that has a big one out there, is that there's no volumes at the highs, all the volumes down at the low, and if you have my book, The Art of Time in the Trade, you know that is the definition of building cause for lower price. If you had just the opposite, if you had volume at the highs, no volume at the lows, that would be building cause for higher price. Stay right there, folks. Coming back with that man, Mr. Dave White. We're going to be talking technology. Dow Industrials down 63, NASDAQ down 5, S&P's off 3.5. Coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials down 63, NASDAQ off 4, S&P's off 3.5. Let's go over to our man, Mr. Dave White, as we do each and every Friday at 3:30 in the afternoon. Don't forget, folks, Dave has a great program right here at TFNN every trading day, 2 to 3 Eastern Standard Time. Also has 2 great newsletters. He has the Path of Least Resistance and the Tech Insider. You can get both of those 30-day money-back guarantee by coming over to our website at TFNN. Go into newsletters. If you'd like the Path, go into trading newsletters. You like the Tech Insider, go into investment newsletters. Dave White, what's going on? Welcome back.
Well, glad to be back. I heard you talking a little bit about semis in the last segment.
Yes.
So I'm going to move this one up a little farther. I talked a little bit about it during my show this week. You can look at the SMHs today, and it's got kind of a little hammer out here down to the bottom. But CLAC, AMAT, a lot of these other stocks look like they're going to go down and test previous lows. And last week we started seeing, I think, the reasons for it, and then the reality of it this week. And a lot of discussion by people that don't know a whole lot on CNBC, kind of spinning what's going on, which is not unusual. But I hope I'm going to give you the background of why things are kind of weak right now in the semiconductor space. They've been working very hard to make chips smaller each and every edition.
Okay.
Now we're getting to the point where these things are, they call them the die size, which is how close you can put one transistor next to another one.
Yeah.
And, we've been in the last few years, 12, 14 nanometers. And we're getting about 10 nanometers, and some of these people are looking at 7 nanometers. And a lot of people were going after Intel earlier this week. I think there's a lot of reasons to go after them, but it doesn't have anything to do with them making money. It has, I think, more on
well, I
beating
guess,
price.
a couple CFOs come out. They said that the business is slowing. I mean, when a CEO comes out, the CEO of CLAC come out and said, hey, business is slowing, period. So.
Right. Well, here's the reason why. These guys have gone to lower sizes, but guess what? When they put something in on one side of the factory and it has to come out on the other side, how many do you actually have that work? And the problem with this technology is you have a huge amount of products that literally don't work coming out the other side. What they call the yield in manufacturing is very poor. Now, there's another thing called FinFET, which is a kind of a transistor that makes the transistor smaller and also allows them to stack transistors like the downtown of Manhattan.
Okay.
We'll just go higher, right?
Sure.
We won't try to go out wider. And that FinFET technology has worked very well. It is much less expensive, and it works very good at this 12 and 14 nanometer without the problem of having such poor yields. Intel's had products that could have come out at 7 or 8 nanometers for a couple of years. They just physically haven't figured out how they make money. Now, a lot of these other companies that went headlong into it are now figuring out that some of these huge investments, because they were not just, it wasn't just like we have to build a new line and it's going to cost us what the old line cost us. This is building new production lines where the cost is 200% or 300% what the previous production line cost was going to be. So there's massive parts of, or massive amounts of money to build things smaller. And then at the same time, you have the issue of actually getting products out the other end in some kind of volume that pays for all that. Now, GlobalFoundries said late last week, it's reshaping its technology portfolio to intensify its focus on delivering differentiated offerings for clients in high-growth markets. Basically, a lot of jumble about why they're not going to go down below 10 nanometer and they're going to stick with the FinFET stuff. If you don't remember GlobalFoundries, I'm sure you do.
Yes.
It's one of those companies that went private after having a lot of problems back in, 2008?
Right, right.
And they've never come back out the other side yet to become a public company. But then, of course, the other one you have is Taiwan Semiconductor. But even Taiwan Semiconductor said that they're going to pull back a huge amount of what they're going to do. So what a lot of people, when they're saying things aren't going well, I think if they were actually expanding on it a little bit, I think what they're saying is that a lot of this money they spent, they're not going to get back, that the yields aren't high, and they kind of got the cart before the horse. Intel's kind of getting hammered for not doing that, but at the same time, they didn't build a lot of these factories that wouldn't produce. So there's kind of some good and bad to both of them, but everybody's kind of waking up to the fact that unless you absolutely need the last little oomph into your technology, you're literally better staying with maybe 10 nanometer, going with FinFET, and having the yields and the cost advantage for building the product.
You know, it's interesting. I just pulled up Taiwan Semi, right? And that's at all-time highs, man. So I wonder what the difference is. Like
Taiwan Semiconductor, of course, is a fab.
Yeah.
They build products for other folks.
Okay.
The business is just so good between they get all Samsung's, they get all Apple's business.
Okay.
So they can literally turn away business. Global Foundries a little less, but most of that technology, including Samsung and Apple, was 12 and 14 nanometers. So they didn't get that far into building a lot of this super low stuff. They did some, but it's not nearly as bad as some of the other fabs in Taiwan.
Yeah, so, I mean, the differential in charts and even in income is incredible. I mean, you know, Taiwan, if you're looking at this right now, folks, this is in basically Korean wons. That's the dollar increment, but big. What a number, man! They're doing $1 trillion.
Right, but then we look at CLAC, and we look at AMAT.
Oh, you can pull up any of them.
Right, and since they're not going to be selling all these devices and new manufacturing to these guys building 7 to 10 nanometer stuff, what's going to happen? Well, they've got the equipment. They can build what they need. They really don't need a whole lot of new stuff. And that's really why AMAT and CLAC and a lot of these other companies just don't have it.
Oh, so listen to this. This just come across the tape. Apple just dove, folks, because Apple just announced that they're on the TAF list.
Yeah. Well, to me, the biggest problem, in fact, if we want to, we can go right to Apple, because, of course, their big dog and pony is on the 12th next week.
Yeah, well, guess what?
Ship
anyone that's on the TAF list, that's a big tax. And we're going to be paying more money for everything.
And we'll see what happens to them. For Apple, the bigger problem that I see right off the bat, when we look and know at least what we think we know from what's going to happen the 12th, is there's just not anything really new.
Okay.
There's not going to be anything really new. They've changed the sizes a little bit. They're going to make a less expensive one. There's a lot of accessories for charging.
Now, Dave, was this supposed to be like a newer phone or just an upgrade? What was
this is like going from I don't know, 1.0 to 1.5 in software.
Okay.
And then seeing that this is like from 1.5 to 1.6.
I got it.
I think it's not much of a move.
Yeah, stay right there. Dave and I come right back, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow right now is down 75. Nasdaq's off 21. S&Ps are off 6.5. Talking with our man Dave White, we are talking technology. We happen to be talking Apple, and Apple just came out with a letter, folks, stating that they are on the list of tariffs, and Apple just went from 225 to 221. It's breaking out its lows right now, and doesn't look like it wants to stop going down. So yeah, let's take a look at it.
I think it was going down before this.
Well, now when you look at the chart.
No, I thought this morning it was actually. So the to me the reason it was probably going to go down, and I thought that it could go to 205 here in the next few weeks, is just looking through what they have, which is literally almost nothing. It's all very incremental. The thing that could probably do well for them is these accessories have a lot of margin in them.
Okay.
But when we talk about buying a new phone, there's always been some kind of really new feature or thumbprint reader, or something that is literally I'd even call it at least, if not revolutionary, kind of high up on the scale of evolutionary.
Yeah, no doubt. Right.
And this is just now saying, well, we're going to come out with a different color. And it's going to be a slightly different size, and everything's going to be kind of the same. And
I mean, I think all our phones. I don't think, I think you could take the phones. It'd be just like the computers. We probably only use 10% of what's on our phones anyway, right?
Yeah, but I mean, the sell the sizzle from Apple has always been newer, faster, better, bigger, more efficient, longer battery life, that kind of stuff. And from at least the leaks so far, this kind of tells you that at least through probably February of next year, there's not going to be anything that really moves the ball much farther. And I think a lot of people, at least from what I read in the blogs and the news, was looking for maybe something new and a little bigger iWatch that doesn't sell more than 5 million units a year. Probably not going to do it. Chargers, things like that with higher margin, does it help out? It certainly does. But if you're looking for some kind of ballistic curve on this, it just doesn't really make me think that people that have phones now, unless they drop them, are going to run out and buy them. Maybe there'll be a handful of Apple people, but there used to be that when anything new came out, you had to have it.
Is there in the processor, is it going to be a faster processor?
No, I think all this stuff is just slightly different.
Okay.
So that now, again, they haven't made the public announcement. It'll be Wednesday.
I see. Okay.
But all the leaks, which generally when you hire, a couple 100,000 people to put them together over in Asia, it's kind of hard to keep, that kind of stuff secret. But from the leaked photos so far and everything, it's still got the notch in it. And that's enough for me not to buy one. And the other thing is that Samsung is apparently leaks from them show that they may have their foldable billfold-like smartphone out in November, maybe late November or 1st of December.
Really?
And that may be, I think we talked maybe even 3 years ago about foldable screens.
I remember when you brought that up. That was the first time because it had to do with the glass, right? That they,
right.
Yeah, right.
And well, anyway, they've been just demonstrating the technology all summer, and everybody, at least the rumors and the production lines from Samsung, say that this foldable, smaller phone, I guess. We had the flip phones for a while, and now they're
I
out
had a flip phone forever. I love those flip phones, man.
And so you're basically going to have that one with one continuous screen across it. So I don't know if that makes it better if they make one that just twice as big. Don't really know what we see in that. We've seen the examples of what they had in these screens, and it's been 3 years that they worked on them. But even Samsung says that they will have their foldable phone out. Now, to me, that is something. Now, again, everything that Samsung makes, they seem to sell to Apple. I mean, Apple,
sure.
The biggest expense of the entire phone is the screen, and those are all provided by Samsung. So that's nothing.
So that's the most expensive part of a phone, huh? The screen. Wow.
Oh, by 4 times.
Okay. Wow.
So yeah, that is pretty much it. You got to figure that out of the probably the bill of materials right now of the top line Samsung or Apple phone is in parts and assembly is probably somewhere around $250 to $280.
Okay.
And I'm going to say that 120 of that's probably the screen. So yeah, it's more than half of everything else. So it is very expensive. Now, these new screens, I have no idea what the price will be and whether or not it'll take years for people to really say, well, I'll be willing to do it.
Yeah, the bendable ones, you mean, right? Yeah.
Yeah, there's always the early adopters, though. But with 3 years, maybe Samsung has had the ability to do that. And that's why I'm saying that probably even though that Apple's coming out with these now, this doesn't seem like much. But if they came out with a foldable phone maybe in February, I think that could be a game changer, right? Especially the way Apple would do things.
I'd love Samsung to come up with one. I'd buy one.
Well, they are. And like I said, they're saying, at least in Korea, they're saying that somewhere around November, they'll be ready to ship. So it's interesting. I just, generally when you push stuff out like this and you have a big dog and pony, Apple, even when it's not a big deal, tends to try to act like it's a big deal. I think, though, by doing that, sometimes you kind of have to match the hyperbole with the product, and I think that they may miss. And Apple just looked rather weak to me, I think, all the way through this fall until they actually say, hey, we have something incredibly new, incredibly neat, and incredibly trick, and it's coming out and it works with 5G and everything else. Then that's another problem with these new phones, and one of the reasons why I love the Samsung phone wouldn't buy it, and that is we're literally 3 or 4 or 5 months away from 5G stuff. I don't know why I want to spend money on a new one unless, like you dropped it and you had to buy one.
Right.
For 5 months, I can wait that long and get one that actually has all the new stuff in it.
Sure.
And of course, Apple has been on a warpath with Qualcomm for a while. Apple, one of the other weaknesses for Apple is that they lost a lawsuit mid-part last week that would allow Qualcomm to keep Apple products from coming in the country.
Right.
So, because they've been warring on these patent issues and the royalty issues.
Yes.
And Qualcomm actually has a incredibly generous to them royalty schedule that is when you compare it against Nokia and some of the other ones, they have a huge, I'm going to say the similar things from Nokia cost about 1/4 of what Qualcomm charges Samsung and some of these other guys for. So it is a very big part of the cost of their product.
Yeah, Qualcomm's good. They've always had a great business plan, man. I mean, it's pretty amazing.
They've got 130,000 cell phone patents.
Wow, unreal. Stay right there, folks. Dave and I are coming right back. We have the Dow Industrial selling off. We're down 91. Nasdaq's off 28. S&Ps are off 8.5. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Talking with our man, Mr. Dave White. It looks like we're going to be taking a magic leap. We're going to find out what kind of headset costs $2,295. So what do we have here, Dave?
Magic Leap is one of the few companies that isn't in Silicon Valley. It's actually in Miami. And they have some very cool technology that looks right out of Minority Report, if you ever saw that movie.
Yes,
of moving everything around.
Yeah, Tom Cruise, right? Yeah.
Yeah. But
strange movie, man.
Just moving everything around on screens and all that kind of stuff. They've worked very hard on it. But what they one of the other things they've been working on is something that seems like a great idea that just never continues to be able to come out of development. Their AR headset is for developers for $2,300, but I got to play with one. There seems to be the same problem now with all of these. Now that we've got a few of them that have come and gone.
Well, is this a headset like for gamers or something? What is it?
Yeah.
Okay.
It's the goggles that you put on that make you look silly.
Oh, I see. Okay.
Right.
Okay.
Just like everybody else, right? You got these things sticking off the side of your head.
Yeah.
The problem is two things. One is the field of view is still way too narrow. It's like having putting blinders on a horse, right?
Okay.
You're just looking at such a narrow range, and of course, VR would be about kind of a 360-degree or at least 180-degree view that you have normally, right? you've got a little bit of a peripheral view. And one of the big problems with all the companies, including Facebook, with their Oculus Rift, was just they all give you this kind of tunnel vision that is problematic. Now, this company's put in about $3.5 billion, but this may go off for another couple of 2 or 3 years before anything comes out. This kind of didn't go very far when this was announced a couple of weeks ago and people started getting them.
Cooking, brother.
Yeah, it's going to be a while.
Thanks, Dave. Really appreciate it, man. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Have a great weekend, safe weekend. Look forward to speaking right back here. Monday morning, 8:30. Wow! Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.